Hello and welcome to BQ Prime. Have private investments picked up? Is recovery broad-based? These are questions we've been trying to answer for quite some time. I'm in conversation with Madan Sabnavis, Chief Economist at Bank of Baroda. He's recently authored a report, and as broadly as per the findings of the report, investments still have to show a broad-based pickup. So far, investments have been concentrated in some parts of the economy, and the future, however, there can be reason to be optimistic. So, sir, to begin with, thank you so much for taking time out for us today.
Thanks, Pallavi.
So what's been your takeaway from your analysis so far?
See, what we have seen is that if you look at the overall new announcements which have been made for investments, they seem to have been very good in the first quarter of this year. But when you do a kind of a deep dive analysis and look at the numbers and see where exactly it's emanating from, we realize that a large part of it comes from the transport sector, which ostensibly would be the airlines industry. Now, we have seen that two national level airlines have actually made announcements for the purchase of aircrafts over the next 4 or 5 years. So that is something which really gets reflected in these numbers. If I look at the comparable numbers on the borrowing side, you look at the corporate debt market or you look at bank borrowing structure, we do see that we haven't really seen any kind of a broad-based pickup in terms of fundraising by various industries. And wherever it has happened, it has been more or less concentrated in areas where the government has been dominant in terms of the infrastructure push which the government is talking of. And I think backward linkages which come to sectors like iron and steel, chemicals, I think these are the ones which have shown some kind of traction. But definitely there are no clear signs of saying that if I keep the airlines industry aside, that there has been a turnaround in terms of private investment, even though going by the commentaries made by a number of CEOs of companies when announcing their fourth quarter results for last year, they did mention to say that they're all geared up for further investment in 23-24. So that is what gives me room for optimism.
Got it. All right. So, and correct me if I'm wrong, but the commentary from the central bank in its latest bulletin for that matter, or from the government, does appear to be a tad bit more optimistic. So from what I remember in the bulletin, the central bank too had mentioned that capex does seem to look fairly buoyant at this stage, aided by, of course, the banking sector and a continuing pickup in capacity utilization, among other reasons. So, I mean, how does one piece together the picture? What's the broad takeaway here?
Yeah, I agree. It's very difficult for one to come to a firm conclusion, but finally we need to go on the basis of data. So I think the CMI data on new investment announcements tells us about what are the intentions. So out here, if I look at which are the industries besides the airline industries which have made announcements, it would again be restricted more or less to a handful of industries. Again, going back, chemicals, to a certain extent, metals, maybe a little bit coming from the engineering sector, but definitely not more, because in fact, I think most of them have come just from one particular industry. Now, while the official sources are very optimistic, they probably do have access to certain information which is not there in the public, like things like capacity utilization. When we look at the concept of investment, the whole thing is that if I'm investing, I need to get the money from somewhere. So that's why I rely a lot in terms of the data on long-term borrowings, which comes from the debt markets. And this time what we have seen in the first quarter is that around 85% of the funds raised have actually come from the NBFC segment, which means that it's not really coming from the manufacturing sector. So it's coming from the financial sector, money which is used for on-lending purposes. And again, if you look at the structure of NBFC lending, it's almost mimics that of the banks. And the bank lending has shown it's more tilted towards retail and services rather than to manufacturing. In fact, the structure of credit up to May shows that with the exception of manufacturing, there has been healthy growth in the other three segments, that is agriculture, services, and retail. That's why I would tend to believe that there's still some time off before there is broad-based growth in investment in the private sector. As of now, it's more or less constrained, limited to a handful of sectors.
All right. So I do want to ask you a little bit more about what's the expected trajectory going forward. The government the central bank and some of the commentary coming in from the private sector does appear to be positive at this point. But there are headwinds continuing as well. So, for instance, we have seen merchandise exports easing the last few months. That's something that's not expected to see a rise anytime soon. Again, global economic uncertainties to continue. So, can you tell me a little bit more about what that impact is likely to be like, and whether that can be something that might hamper private sector intentions going forward? How does one look at that?
The way I look at the Indian economic structure is that we are basically a domestic-oriented economy. So that's one of the reasons why we can be sanguine about a 6.5% growth rate for this year. I think that's what RBI has. We have taken a more conservative view of a range of 6 to 6.5% at Bank of Baroda. But if you look at this rate, it would still be much higher than that of other large economies. So I think the reason as to why we're able to do well, notwithstanding the fact that the global economy has gone in for a slowdown, is that because we're domestic oriented. So this also means that while exports are going to slow down, and that's what we have seen in the last few months, what you have pointed out, and it's going to continue to be lackluster for the rest of the year, it's not really going to have that much of an impact in terms of our GDP growth. It's definitely lower than the 7.2%. So I would not say that we are totally insulated from the global slowdown. From 7.2, if we come down to 6.25 or 6.5%, it means there is definitely a slowdown. So there is an impact which is coming in. And the kind of growth which we saw in exports of both goods and services last year may not be replicated this year. I think we are all gung-ho about export of services led by the software sector doing very well. They did very well last year. But I would tend to think that there will be some erosion in terms of this buoyancy, because finally, at the end of the day, everything depends upon how the world economy performs. And if for the second successive year we're seeing a slowdown, it will necessarily mean that it has to have ramifications also for the export of services. So I think this so-called contradictory picture can be explained more from the fact that we are a domestic-oriented economy. That's why we keep harping a lot upon whether the monsoon is good, Kharif is good, because that's going to influence rural demand, which will finally have a bearing on this 6.25 or 6.5% growth we're talking for the Indian economy in this year.
All right. So, something else that I actually wanted to ask you about is the manufacturing sector. Like, divergent indicators appear to be presenting a slightly divergent picture of the manufacturing sector. For instance, we've continued to see manufacturing PMI do particularly well, while industrial production has been underwhelming for most months the last few months. So again, what's your outlook on that? What's the manufacturing sector looking like? And I also want to ask you specifically about SMEs. Again, while CAPEX appears to be driven largely by a handful of the larger players, the commentary from SMEs, again, does not appear to be as assuring. Would that be right?
Let me take the first question first. When you spoke of PMIs, I think we should realize one thing, that the relationship between PMIs and IIP doesn't really exist. The reason being that two different concepts. When we do an industrial growth rate, which actually finally goes into your GDP calculations also, it's a case of doing a comparison year on year. It's based on actual data. Whereas when you're talking of the PMI, it's more a kind of a questionnaire which is sent to a handful of companies where they're asked whether they're better off on the basis of certain parameters over the previous month. So one is a month-to-month comparison where I say yes, no, there are no numbers involved. So if I'm saying that my dispatches, for example, are higher than that of last year, or my employment is higher than that of last year, I get a tick mark and that adds to my PMI. Whereas when I'm talking of industrial production, I'm actually seeing whether the growth numbers, the physical production which has taken place this year or this month, which I'm talking of, is better or worse off compared to last month based on actual numbers. So I think that's the reason why we have had these anomalies coming through. The PMI, to my mind, is, yes, a very good initial indicator to tell you what's happening in the economy, because the IIP does come out with a lag. But we have seen that there is no positive correlation between these variables. And at times, the PMIs have been very, very buoyant. Like, for example, if I go back to 22, 23, the PMIs have always been above 50. In fact, it's averaged, I think, between 55 and 56 last year. But manufacturing output had grown by just 1.3% going by GDP. So I think we have to be a bit cautious while interpreting these numbers. It's a useful indicator, data, but definitely does not really tell us more about what could be happening in terms of actual growth, in terms of GDP growth in the manufacturing sector. Second, when we're talking in terms of SMEs, I think yes, the SMEs are the sectors which has not quite recovered after the impact of the lockdown and everything that was done by the government, RBI, to mitigate the negative impact. And while things have gotten back to normal in terms of the supply chains getting back to normal, we have still seen that they have been affected a lot, both in terms of employment. They have not really managed to get the labor back. And second, I think, is inflation. I think the inflation factor is something which has been absorbed well by the larger companies. So if you look at the way in which the corporates have performed in 22-23, there's been very good top line growth, but high inflation is something which has come in the way of growth in profits. Whereas if I'm talking of SMEs, they have not been in a position to do the same. And that's one of the reasons as to why they have ended up, in terms of their profits falling, a large number of them actually making losses also. So in fact, if we look at the overall corporate performance and try and distinguish between the larger and the SME companies, if I leave out the medium sector has still done fairly well. But if we look at the micro and small, they have been impacted. They've actually done quite badly in the last year. So I think the inflation impact as well as the employment impact has come in their way. So while the top line has been regained, they're still growing in terms of sales, but the same thing has not really come through in terms of profits. So I think they may probably have to wait for a little longer before they really get both their feet on the ground.
All right. So before we let you go, we're expecting inflation figures this week, and I do want to know what's your expectation from the figures. We have seen a seasonal rise, of course, led by tomatoes, as been widely discussed, but also across a lot of other fruits, vegetables, pulses, cereals. So what's the expectation and what's the outlook going forward?
See, I think that we at Bank of Baroda, we have a forecast of 4.6%, which is slightly higher than what it was last month. That is, for May, we had 4.3. But still, the number of 4.6% looks very comforting from the point of view of monetary policy, because we are well below the 5% number. And the anomaly again out here is that while we are seeing prices of tomatoes going up substantially, I mean, we're paying over 100 rupees a kilo for tomatoes. Prices of onions have also gone up at least around 20 to 30% compared to last month. But what really happens is on account of the base effect, because these are seasonal kind of features. And what I've checked up is that even last year in the month of June, we had seen a spike in the price of tomatoes. So what I really expect is that while the overall vegetables basket would still be showing negative growth in prices, ideally it should show at least a positive growth. We had negative growth in prices in the last couple of months. That may get moderated a lot, or there could be a marginally positive inflation out here. But the overall inflationary impact may be muted. So this 4.6% number will not really capture the impact of the price, the increase in prices of vegetables, which we have seen in the last month. But I'm quite sure that the Reserve Bank of India is not going to get carried away by this number. And going by the commentary in the last monetary policy, I think they have raised a red flag about need to be careful about how food inflation actually pans out, given the fact that the monsoon at that point of time was supposed to be delayed. Today it's come in well, but given the kind of spread which you have seen today, I think it's a very high risk factor, especially when we're seeing prices of cereals, in particular rice, and pulses, especially tur out here, where the prices have already spiked up in anticipation of a lower output because of the monsoons not being too favorable and in certain regions of the country. So I think inflation outlook will be definitely in the upward direction. Once the base effect weathers away, that is, gets diluted, we may be back to inflation numbers moving towards 5% and probably also crossing it. So that's one of the reasons as to why the Reserve Bank of India also has spoken about the CPI inflation peaking at 5.4% in the third quarter. That is just after the monsoon, the harvest comes in, you get a clearer picture. There are expectations that the inflation number would be peaking at that point of time before correcting downwards. We would tend to believe in this particular trajectory. And for the entire year, we're looking at an inflation number slightly higher than the RBI, an average of around 5.2%.
All right. That was most informative. Thank you so much for taking time out for us today.
Thanks.
How do you make the most of the India opportunity as an investor? For that answer, all roads lead to BKC in Mumbai on the 13th of July. Three big money managers describe the size of this opportunity. Two of the largest mutual fund CIOs then tell you about the mega trends that they're investing in. Will the current capex cycle be similar to the one between 2003 and 2008? We get that answer from Sanjeev Sharma of ABB in a conversation with veteran investor Madhusudan Kela. And then we rounded off with two of the most prominent investing names talking about how to make the large bets and make it really big. All of this and more at the Trident Hotel in BKC on the 13th of July. Catch the action live on BQ Prime and NDTV.